Good morning, you wonderful melon heads. I hope you are well. Today is Thursday, May 25th, 2023. And welcome to Hype City. Population everyone. Nvidia posted their earnings yesterday, and it's being described as the forecast for the ages because they forecast second quarter earnings next quarter to come in. Their revenue was forecast to be $11 billion when the market was expecting $7.2 billion. Again, that is a forecast. This is not money in the bank. This is Nvidia saying this is what's going to happen. Now, second quarter is well underway, so it looks like I'm guessing some of this revenue has already materialized, but just an absolute blowout forecast from Nvidia. And the stock market took that, and if you think the AI hype was bad yesterday or 2 days ago, wait till you see it today. I don't watch CNBC, folks, but I'd imagine Jim Cramer is just giddy like a schoolgirl at a Beatles concert right now looking at these numbers. And some of these numbers will truly amaze you, all right? Nvidia stock up somewhere around 30% at this moment. It was up 28, 29% pre-market. Who knows what it's doing right now, right as the market opens. The company added more than $200 billion in market cap in minutes last night. $200 billion in market cap. It is now the sixth most valuable company in the world, Nvidia. Some of these numbers are they just defy logic. Nvidia has added more market cap than the entire market cap of Intel and Micron combined since last night. So they just added an entire Intel and an entire Micron to their existing market cap. The price to earnings multiple at Nvidia was already 175 heading into last night. Now it's trading somewhere over 200 times earnings at a time when the average price to earnings multiple in the S&P 500 is somewhere around 22, which even 22 is historically high for the average PE multiple of the S&P 500. Nvidia, 200 times earnings. Move over, Peloton. There is a new poster child for the everything bubble, and it is Nvidia. Ticker symbol HYPE. Or maybe ticker symbol FOMO would be a little more appropriate. Let me know down in the comments what you think the new ticker for Nvidia should be. Elsewhere, we got more bad news from retail today. Best Buy posted their earnings. Same-store sales at Best Buy down 10.1% year over year. And man, for the last 2 weeks or so, I've been talking as these retail numbers came in, Target, Foot Locker, Kohl's, Walmart, all of them coming in. We're seeing the same thing over and over again, with the exception of Walmart. Same-store sales down big at all of these retailers. And again, when it comes to retail stocks, same-store sales, that is it, man. That is the one statistic that you need to look at. If you only have 1 second to look at the health of a retailer, you need to look at their same-store sales, and they suck virtually across the board in the market right now. Walmart is the lone exception because Walmart is benefiting from inflation driving people down the luxury ladder. And what's at the bottom of the luxury ladder? Well, it's Walmart. And inflation is making everybody poor, so they have to buy their food at Walmart. And Walmart is the one retailer that is actually seeing increases in same-store sales. So you can add Best Buy to the list of retailers that are just on life support right now. But it doesn't matter. Best Buy stock was up several percent because everything was up. The NASDAQ was up almost 300 points pre-market. Let's shrink my big melon of a head and just look at some of these wonderfully absurd numbers this morning, shall we? We have got the S&P 500 currently up 21 points. Big red candle down right now to start. We gapped up at the open this morning. It looks like it's given up all those gains almost instantly. We'll see what happens there. The Dow is down 79 points, or 0.25%. Nvidia is not a Dow component. But looking over at the NASDAQ, okay, the NASDAQ's given up a lot of those gains early on, up 172 points right now. Again, the futures were showing an open up 300 points. So at least coming a little bit back down to earth, but still up 1.4% on Nvidia alone. Absurd doesn't even begin to cover it. And while these stocks are rallying, folks, the U.S. dollar continues to head higher. One of these things is not like the other. Higher dollar usually means lower stocks. The DXY is at 104.11, up another 23 basis points. blew right through the 103s into that 104 handle today, folks. And I did a video on what's happening in Argentina last night. The world is facing a dollar shortage. It defies disbelief. After all of the money printing and J-Pow go burr of the pandemic in 2021, it's hard to believe it, but yes, dollar scarcity is becoming a problem. The dollar is now facing a shortage. It's driving interest rates higher, and it's driving the value of the dollar higher. And no, Argentina and all of these, the global south and the BRICS countries, this is not some coordinated offensive against the dollar. They're trying to de-dollarize because they are desperate to get their hands on more dollars. They need them to buy food, to buy energy, to buy anything else. And dollars are getting hard to come by. Of course, that is inevitable when you increase your money supply sevenfold over a period of 5 years, like Argentina did. And looking at the DXY, that chart is just bounced right off the neckline of this head and shoulders pattern, which I'm about to retire this head and shoulders pattern because it looks like this arrow was accurate and we are heading higher. Now, there's one thing I would draw your attention to, and that is check out the relative strength index on the DXY chart. The dollar is due to take a breather here. This thing is getting a little bit overbought, so I would not be surprised to see this take a break. Maybe it's the debt ceiling deal and the sigh of relief that gets breathed across the board if and when the debt ceiling deal finally happens, but it will be short-lived, whatever break the DXY takes, because Janet Yellen is going to go borrow $1 trillion just as soon as the debt ceiling gets raised. That is going to add to dollar scarcity. But we've seen before the RSI gets up in these levels and the dollar usually corrects within short order. Looking over at the bond market right now, the 1-month Treasury is yielding 5.75 this morning. It was over 6 at one point. And then Speaker McCarthy came out and said he was optimistic about a deal getting done. No details, he just smiles and pointlessly makes some kind of empty statement about optimism, and the market says, "Oh, great. Yeah, 1-month Treasury yields go down then." Elsewhere, check out the yields across the board in the market right now. The 10-year up 4 basis points, the 2-year up 12 basis points. So we've got yields heading higher. That is, people are selling off bonds right now. I suspect that has something to do with this change in the CME futures pricing right now. This is interest rate futures trading, and right now we are predicting a 40% chance of another rate hike in June. That was 32% yesterday. Now it's a 40%, and they're saying there's now a 49, nearly 50% chance of at least one more rate hike between now and July. And check out over here, 18.6% chance of 2 rate hikes between now and July. So the market is starting to price in a slightly more aggressive Fed. Over on your daily dose of debt ceiling doom, we've got the Treasury. The daily statement, U.S. Treasury currently has $76.5 billion in the Uncle Sam's checking account, or should I say Aunt Janet's checking account. That is up slightly from yesterday. That won't last. We have got a 4-week Treasury auction coming up today. They're going to be paying interest on those maturing bonds, so I suspect we're going to see a pretty big step change down in the TGA balance when we get the next data point. But here is also going on in the debt ceiling discussion right now, and I promise to move on from this topic very quickly because I hate the debt ceiling topic. U.S. credit rating at risk of a Fitch cut on debt limit impasse. Congratulations to all of you ratings agencies out there. As always, you guys are just way, way out in front on this issue. You saw this coming a mile away. Keep up the good work, ratings agencies. You guys really doing a great job as the watchdog of risk for the rest of us. And here we go. Nvidia's blowout forecast sparks $260 billion AI rally. $260 billion. European chip stocks surge after gains among Asian suppliers, and investors were looking for evidence that AI boom is boosting sales. Nvidia Corp's forecast for surging revenue surprised even the most bullish analysts on Wall Street, propelling the chipmaker to the cusp of a $1 trillion market cap and igniting a global jump in stocks linked to artificial intelligence. The Santa Clara-based company gained as much as 29% in pre-market trading, on course for a record high after saying it expects about $11 billion of sales in the 3 months ending July. Analysts had estimated that figure was going to be $7.2 billion. Now, I wonder, will they be held to account for that $11 billion number? That is a pretty bold call there, Cotton, that he made an $11 billion forecast for sales in the second quarter, up from 7.2. Will the press report on this with the same enthusiasm if they miss that number? I wonder. Or is the press just desperate to keep the AI hype train alive, which has been causing people to FOMO into the stock market, driving stock valuations higher, even at a point when earnings are in decline for almost every company in the S&P 500. Nvidia, the biggest maker of the advanced chips required to train a new generation of AI services, added to expectations for a burgeoning technology. Rival chipmaker AMD jumped 10%, while Taiwan Semiconductor and Advantest also climbed. We believe this is just the beginning of a paradigm-altering generative AI wave. Wow, folks, watch out for those paradigm-altering generative AI waves. According to Barclays analyst Blaine Curtis, so far it seems that Nvidia is the one capturing nearly all the economics. Folks, the market is pricing Nvidia as if every single device in the world has an Nvidia chip installed in it. Now look, this machine that I'm using right now, it's got an Nvidia GPU in it. I like it. It works well. But, like Teslas are great cars. They're arguably the best cars in the world. Okay, maybe not, Lambos and all that other stuff. I get it. But the market was pricing Tesla as if every car on the road in the whole planet was already a Tesla. And as if every house in the planet already had Tesla solar panels on their roof and Tesla batteries in the basement. It doesn't. And when you're priced for perfection, if you don't deliver perfection, your stock's going to get roasted. So I don't know if Nvidia is going to deliver on this perfect forecast. What did they call it? They called it the guidance for the ages from Nvidia. I don't know if they're going to be able to deliver on it, but I don't want to be betting on it if it doesn't happen. And likewise, I'm not going to short it either. I'm not going to stand in front of this stampede and say, hey, everybody's going the wrong direction, and then bet my life it's about to stop. But I will point out the absurdity of this run in Nvidia. The largest single-day gain of any stock in history, Nvidia. Second only are outpacing Apple's big gain from November of last year. And right now, Nvidia stock is currently up 23.25% at $377. The market cap for Nvidia is now $930.5 billion. Again, hype just doesn't seem to cover it, folks. And again, hey, these chips are great. AI is awesome. It's got potential. I get it. It could revolutionize a lot of industries. It's a great productivity enhancing tool. It can make the average worker much more productive, but it's not there yet. It is not a thing. Right now, it's just a chatbot program with political bias. That's all it is. I mean, I'm sure there's other things you can do. I've seen AI images and I've seen the deep fakes, and I get it, but those things are not yet adding value. Those things are not yet adding to the bottom lines or top lines of any companies out there. It's all hype. And, AI hype, global depressions have a top way of derailing hype trains. Let's just put it that way. Elsewhere going on in the market right now, we've got Best Buy stock jumps after earnings top estimates. Best Buy stock was rising in pre-market trading Thursday after the retailer posted better than expected profit. Best Buy posted adjusting earnings of $1.15 a share, topping estimates of $1.10 a share. But it's this line that I want to mention here. Same-store sales declined 10.1%, in line with analysts' expectations. Folks, there was a time when a 10.1% decline in same-store sales was a death sentence for a big box retailer. There would be no recovering from that. That would send your stock down into the deepest depths of economic purgatory, but not this market, folks. Best Buy stock up 1.6% on a 10.1% decline in same-store sales. We also got a lot of economic data today. It's not just the retailers. Look at this. United States corporate profits. This is data from the Bureau of Economic Analysis. Corporate profits in the United States tumbled 6.8% in the first quarter of 2023. A 6.8% decline in profits. These are not adjusted for inflation, folks. These are nominal numbers. U.S. company profits are down 6.8%, and the stock market is up. The stock market represents shares of the earnings of companies. The earnings of companies are down. The stock market is up. One of these things has to change. Either the earnings have to come back up or the stocks have to come down. Which one do you guys think it's going to be? Are all of these companies going to suddenly start making money? Maybe the Nvidia chips and all their AI is going to help them all make more money. I don't know. But it defies expectation, folks. The multiples just continue to expand. The S&P 500 now trading at about a multiple of 22, while Nvidia trades at about 200 times earnings. Elsewhere, we got some inflation data today. PCE came in quarter over quarter. The price index for personal consumption expenditures in the U.S. rose to an annualized rate of 4.2%. That's the headline number. That's up slightly from the 3.7% we got last month. So that's a big jump, folks. And the other thing I would point out is core PCE came in at 5%. So we now see this in both inflation measures, CPI and PCE, where we have got core inflation is higher than headline inflation. The difference is headline inflation includes volatile food and energy. Core inflation does not. Well, when you see core is higher than food and energy, remember last year, Jerome Powell, while they were telling us inflation was transitory and then they finally stopped telling us it was transitory, then they told us it was all because Putin, it was all because COVID. Well, what are they going to tell us now? Because you can't Putin and COVID your way out of 5% core PCE. This is sticky inflation. And so this is probably why the economy is now pricing in a 49% likelihood of a rate hike between now and July because inflation is proving to be sticky. All right, let's move on here. By the way, I still think deflation is on the horizon. The money supply is shrinking, and the solution to higher prices is, of course, higher prices. I want to send a thank you to Robin RC, a.k.a. Mr. Mike Binder. Thank you very much, sir, for the super chat. He says, La La Land, what goes up must come down. Mike, gravity always wins eventually, and I agree. I do not think Nvidia stock has reached escape velocity and that it's now in orbit, ground control to Major Tom. It's never coming back down. Nvidia stock, look, again, this is not to knock the chips. This is not to knock the potential for AI. But Nvidia stock right now is priced as if they are AI. Every computer, every machine in the world is going to be loaded with Nvidia chips and nothing else. They're going to get all of that market. And if they don't, well, then the price has to come down. They are priced for absolute perfection, beyond perfection. They're priced for lunacy. But remember, folks, markets can stay irrational longer than you can stay solvent. Thank you very much, Mike. I appreciate the super chat, the support of the channel, sir. And thank you to Charles Coughlin, who says, I love Bitcoin as much as the next guy, but how can it scale up to truly worldwide adoption and regular use? Not pushing S-coins, generally curious. Look, I am not a big blockchain tech guy, but I can tell you Lightning Network is encouraging. Does Bitcoin have scaling problems? Yes. Are they 100% in the rearview mirrors? No. But what I can tell you about Bitcoin is I would much rather deal with Bitcoin and its scaling problems and its logistical issues and the tech know-how that needs to be overcome in order to safely use Bitcoin. I will take that over central bankers and what they have done to fiat currency any day of the week. And also, I also like the shinies. I like gold. I like silver. I like Bitcoin. I like unbanking myself because, oh, by the way, while the world is focused on AI hype and FOMO, let's keep in mind, folks, we're still in the middle of a banking crisis. We are less than 2 months removed from the second, third, and fourth largest bank failures in U.S. history. And the problem that failed those banks did not go away. Unrealized losses from U.S. treasuries has not gone away, folks. That is still sitting on the balance sheets of all the banks. Commercial real estate losses are still sitting on the balance sheets of all of the U.S. banks. And the drain on deposits from checking and savings accounts into money markets continues. The banking crisis is not over. But, you know, whatever, just FOMO and Nvidia, ticker symbol HYPE, and hope for the best. Sure, why not? You know, just print some more money while you're at it, borrow it from China. Thank you very much, Charles Coughlin. I appreciate the super chat and the support of the channel, sir. I agree there are scaling problems with Bitcoin, but again, small potatoes compared to the problem of central bankers and runaway deficits. All right, guys, that's all I got for you today. I want to say thank you very much for the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. There is a link down below should you feel so inclined. And hi, Mom, hi, Dad. I love you guys. Till next time, live small and dream big.